Hi traders, it's Friday, it's the 5th of September and it's non-farm payroll again. First Friday of the month as ever, the US jobs data known as non-farm payroll, NFP. It's deliberately doesn't use the agricultural workers. It's a bit of a historical thing, to be honest, but that name has stuck. There's been a lot of queries over the last few months about the reliability of the data. The head of the Bureau of Labor Statistics in the United States was sacked by President Trump. There isn't a new guy. It is going to be a new guy, not a girl. A new guy in place yet. There's a temporary person in charge at the moment. So we'll see what it looks like. Let's have a quick look at the calendar. This is sterling, the chart I've got up here at the moment. Let me just open our calendar. Sorry, I should have had the calendar open, shouldn't I? Lots going on today. We've also got we've had some we had retail sales out of the UK better than expected. It's to do with the success of the football here over the summer and also the relatively good weather. So retail sales better in the UK this morning. The other big news out of the big news out of the UK is that Prime Minister Starmer has actually lost his deputy leader, Angela Rayner, accused of not paying enough tax on a flat that she bought, having gifted or put a house in trust following a divorce for a disabled son. But the Telegraph came after her last week, and she's had to resign, or she has resigned. It seemed somewhat inevitable. Sterling hasn't blinked on it, to be honest. Sterling's stronger here, still below 135 this morning, but the dollar's relatively weak today as well. It's the hourly chart for the euro. Euro back over 117. Aussie at 60, 45, just shy of 60. And the CAD, which we're going to look at in a bit more detail. But yeah, we actually triggered a long trade last night. And I've still got it open. And my instinct would have been to close this as it went through. And I normally do it sort of early on in the morning. But I looked at this around here at 7, 8 o'clock. Actually, I was looking at these at 6 o'clock this morning. I left it and I've been out since. So, whoops, hello. What's happened there? There we go. Vagrancies of connections and the internet and what have you. But anyway, non-farm payroll up in a few minutes. Let's just have a look at the calendar and see what we're expecting. So this is well out of the money. I brought the stop loss up on this dollar CAD trade to 137.80. We got in up here at 138.25, looking to 138.55. That's the argument is we've held it this long. My this should have been closed out. Let's be honest. The rules, would have closed this out because we've gone through the 50-hour moving average and we've gone down since then as well through the 138. So, that trend is very much down. And the hourly strategy, having been long from the second here, would have turned short this morning here at around about midnight as we opened the Asian session, and a tentative short followed through that because we followed through there, and then it would have added here on the break of the 50-hour. It may have also added here on the that big down candle there at 8 o'clock on the European Open. The 20 is crossed from above to below the 50-hour here, so it's very much short today to the downside. So our stop loss looks like it's going to get hit if we leave this on, which I'm going to just for demonstration purposes more than anything. For non-farm payroll, we'll go down to the 5-minute time frame because we've obviously got Canadian data as well. On the flip side, you can see our with the trade we took yesterday on the Nasdaq 100. We're very much in the money. We got in at 23,459, and we're currently trading at 23,735. So stocks closed strongly yesterday. But let's just go back to the case in hand. We'll come back to that in a minute because we had a strong hourly candle into close. I'll explain what that means later on. But let's just bring our calendar up. And remember, guys, if there's anything you want to look at in particular assets, whether it's gold or any crypto or any particular forex cross, stick it in the box and we'll have a look at it together. As far as the data is concerned today, and the detail of the data, if we just look at the Sorry, it's today, isn't it? What I'm talking about. If we just look at the US, the high impact, the two. There we go. That's like that'll apply. So we can just sorry, it's on the wrong screen. Sorry. So you see, core retail sales much better than expected in the UK this morning, but there was also a tick up in house prices. Well, they had been falling, but they came in stronger than expected. So retail sales, the core one in particularly, 1.3% from 1.2%. So it's a beat, but not that much of a beat. GDP better in line, more or less in line out of the euro area. Factory orders in Germany were a big disappointment this morning, minus 2.9%. So that manufacturing sector decline still looks set. We'll see what the PMIs look like next month. But this is the data that's coming in 6 minutes' time now. So headline now is 75,000. Many are talking about, anything under 40 or 50,000 or anything above 120,000, could be some shocks to the system. So there's a number of analysts and central banks on Wall Street looking around about the 45, 50 number as well. But the consensus, there's some a bit higher, expecting a bit of a surprise to the upside. So the consensus come to 75,000. About 10 days ago, when these were first released, when the Bloomberg survey was first released, it was around about 46,000. 27th of the 8th, first time I looked. So the 27th of August, it was 84,000. We're now 74,000, 75,000. The Reuters poll is also 75,000. Different banks, different parts, well, similar overlap banks, obviously the main big ones on Wall Street, and the European banks and the Asian banks all have their offices in New York and have their opinions about what the headline number is. It's the one that always grabs the attention. But the detail is also key. Unemployment rate is expected to tick up. Remember, there's been this big argument that jobs are starting to weaken. There's a big conundrum, the argument going on within the Fed and elsewhere with other opinion makers, that the crackdown on migration and immigration has had quite a squeeze on some of these peripheral jobs in the US, as well as some of the core sort of hospitality jobs, leisure jobs, all that sort of area. Obviously, Trump was and Musk, when he was there, was sort of trying to screw down on the government jobs. So focusing on trying to recoup or repatriate lots of manufacturing jobs. And manufacturing jobs have remained very weak up until now. The impact of the tariffs, we're 3-4 weeks into the sort of the beginning of the impact. They don't seem to be as inflationary as many as the doomsters were saying, but obviously the big brunt of it is still to come. We got these huge numbers, 39% on places like Switzerland, 50% on India, that 25, and they continue to take oil from Russia. And there's no signs of that changing from it following the little powwow the New World Order had in China this week. It's all a bit twitchy. Some of the comments that were caught off mic or on hot mics, whether deliberately or otherwise, are also quite interesting. So 4 minutes to the big data. The other number I always have a real drill down on is this U6 unemployment rate, the wider measure of unemployment. It's got this big skew between the part-time and full-time employment. So there's been a lot of part-time work, not so much full-time work kicking around. And then the other factor has been this idea that companies seem reluctant to actually start laying off people. Obviously, the data this week, the claims were up yesterday. The jolts were down significantly. The jobs openings are down. The claims are up a bit of a tick, but still looking relatively healthy on a week by week basis. So it suggests that companies are not laying people off, but they're also not hiring. So earnings might start to take a bit of a tick. They've been up over 4%, 4.1%, 3.9% last month. They're expected to come in on an annualized basis at 3.7%. The monthly one is the key one for August, 0.3 Right, and then on top of all of this, or inside of all of this, the other big caveat is this is the August data. The August data is notoriously inconsistent, gets revised quite significantly. And remember last time, remember the charts on the 1st of August? We had these massive moves, big moves down. Let's just use dollar CAD as an example on the daily time frame. Here we are, 1st of August. 1st of August is back here, isn't it? No, where are we? First of all, it's a bad example, actually, dollar CAD, but there we go. Big candle. If we look at the indexes, or the indices, indices. All right, okay. Indexes, this is the upgrade we've had today. So if we look at the S&P, for instance, on the 1st of on the 1st of August here, there was the big sell-off on the Friday, the 1st, and then they bounced back there on the Monday. So Thursday we'd also saw it, but big reaction to non-farm payroll was a big move under the 20-day moving average for the stock market. Since then, we've recovered quite nicely. And again, it's another chart that we are long. So that is the other key thing. It's August data, so it could be even more notorious than the last lot we've had. But remember, the revisions we've had that caused the Trump to act to sack the head of the BLS, the Bureau of Labour Statistics, meant that the 4-monthly average is around about 35,000, 75,000. If it comes in at the number that's anticipated, be the 4th consecutive month under 100,000. Historically that would have been a bit of very much a worry. But with the new regime, the new economic regime that Trump's trying to push through, it's not that much of an issue as it would have been in the past. So you trade what you see, you play what you see. And here we come with the data. I don't know if it's going to actually update here. Payrolls last month, non-farm 73. Is it going to update? And we're going to have to refresh it. It's obviously pinged across. We'll come back to it in a minute. I'm going to have to refresh it, aren't I? And obviously we've got the Canadian data as well. Unemployment rate back to 7%. It's a big psychological number for Carney and his crew. And then we got the key PMI data as well, looking likely to be quite weak by the looks of things out of Canada as well later on. So the dollar CAD could be a significant mover if the data comes through. So let's have a look how we've come. It's got, oh God, I hate this calendar. It drives me mad. So the headline, is that 22,000? Oh my word, 22,000. Right. That is we're outside of the window. We're outside of that 40 to 120,000, 50 to 120,000. That's a huge miss. Remember the caveat I said earlier about it being Brazil, being August, but that's a big miss. 22,000. How the administration are going to talk about that. So certainly confirming really the weakness of the jobs market and the revision from last month. That's going to be another major concern. It's only gone to 79,000. So this is the 4th consecutive month under 100,000. It means the 4-month average has been pulled right down at 22,000. His first reading. A decline in manufacturing of 12,000 jobs. Average weekly work also weaker than expected. Last month was also revised down. These are bad numbers for the administration. Bad numbers for President Trump. Earnings have slipped down, but they're in line with expectations. And monthly earnings also, average hourly earnings on a monthly basis, also in line at 0.3 of 1%. So that is a very, very weak number. I can't remember the last time we were 22,000, but certainly outside of the norm. So we will be absolutely nailed on for a rate cut on the 70. Sorry, let's go to the let's actually go to the Forex. Forex would be, well, let's do the indices, the Dow, the S&P here. So a weakening dollar, absolutely, I'm sure of that. And this is why we've got a spike in the stock market. So stock markets, initial reaction is to the upside. We'll see how that actually settles out. But the S&P spiked to 6,517, and it was as low as 459, so under 6,500 for the first time in a while on the S&P 500. What I'm looking for, the majors, the euro 117.40. So we've had a massive leap up. So a big hit for the dollar, as you might expect. So breaching 117.40. So those long dollar trades from last night are definitely really stopped out. We just got the dollar CAD that was crashed through my stop loss here. Whether I actually got filled here or not, is questionable. It might have been all the way down here somewhere. So I'll see what that looks like actually on my strategy. I literally just moved that up earlier, and the rules were instinct was I should have been out of this at 7 o'clock, 8 o'clock this morning. Certainly on that. Sorry, it's a 15-minute chart. Or certainly on the hourly candle here. Normally I would have closed that out here probably when I first saw it this morning. But the breach of the 50-hour there, when I first looked at it, I left it. It was against. Then it went under 138. We've been all the way down here, 137.58 on the initial reaction dollar CAD. So that moved down. Lots of people will be short this morning, bagging some profits on that. We'll come to the Canadian data in a minute. Guys, if there's any other asset, we'll have a look at gold in a minute. I know a lot of you are gold traders as well. So weaker dollar on that big miss certainly for the headline. Let me just run through the details again. As I see the raw data here, I'll actually look at the information as it's coming across. Payroll's negative. That's the other one. Manufacturing is negative, a decline. That's a really not gonna. How they're gonna work this off? I mean, they're going to say "I told you so" to Powell and the Dubs, but certainly we've turned much more hawkish on the Fed. The Stephen Mirren appointee, who's also a member of the government. Obviously, it looks like he had his hearing yesterday, but his confirmation hearing that looks done and dusted. But he's still a member of the government, so he's not going to go against President Trump and not vote for a not cut. But certainly, the cut for September 17th was 97% yesterday. It must be 99-100% today. It's what October looks like. It was, remember, early in the week, only 50-50 where they were going to go again in October. That will have improved and changed significantly as well. Just while I was still here on the calendar, the Canadian data doesn't look great either. Look at that, a negative 165,000. 65,000. Yeah, 65,500 from the Canadian jobs report as well. So a decline there. It was 40,000 or 41,000 last month. They were expecting a bit of a incline, a bit of a bounce back. That is also quite negative numbers there out of Canada. Participation rate is sort of held up. It's slipped a bit lower, and unemployment has ticked up. So Carney very much under pressure to actually perhaps improve relationships with its nearest neighbour and improve these flows of information, data, and obviously goods and services as well. So, the tariffs could be hitting the Canadians a wee bit harder. That's a big move. But again, as I say, big caveat is this is an August number. It still tends to be the most ridiculous of the year. As I said in I don't know if you've seen our little video we did, our daily video. I talked about that yesterday. But yeah, big surprise to the downside. It's outside of expectations. And the fact that the revision, although it's gone higher, it's only 6,000, gone to 79,000. So that's a weaker dollar, certainly, one would expect. Actually, the dollar against the CAD here has brought all of that back. It's not my stop loss. We're out with that trade, and for a quite significant loss there in the end. But anyway, such is life. Dollar yen 147.40. So that had been having a look at 148 earlier. Where's all my lines gone? It's disappeared. Earlier, and we're at 147.40 dollar CAD. Sterling has smacked through, as you might have expected, that 135 level on the weaker dollar, and continues to hold 135.16 at the moment. Seems the stocks have held on to. It's on you updated. All right, so that's favourites on the awesome. Onto those initial gains. So S&P, so we were down under 6,500, but remain to the upside. Remember, we were long this as well from last night. Was last night or night before? Yeah, last night we went long on the S&P 500. We'll actually come back to all our trades. I haven't updated the ones from earlier in the week, but that's in the money. The Nasdaq was another one. Did we take the Nasdaq? I can't remember. Yeah, this is a long, wasn't it? Yeah, this is the one that's on the on the system here, isn't it? Yeah. So through our initial target area, might take some of the profit off the table there, but $92 to the good there on a very small lot size. 2.8. Remember when we did this last week? We showed you the I only wanted to risk 1%, so it took me to 0.28 of lots on my $10,000 account. And that's the way to trade. And that's one of the real beauties. I know a lot of you are not great fans of the trade locker system, but that's one of the setting your stop loss and your risk is really, really powerful here. It's much better than, I would argue, much better than MT5 or 4. Obviously, a lot more you can do with those platforms and have been around a long, long time. But we got C Trader coming, guys. I haven't used C Trader for many years, but it's really nice for us techies from pro and coders. It is the really great platform. So we've got that coming at the end of the month. Very, very busy September for us here at theproptrade.com. So stay in touch and keep in touch. But wow, what a number that was! That was a big surprise to the downside. Lutnick being interviewed now live on Bloomberg. So if you got YouTube, if you find the Bloomberg channel, it's a way of getting Bloomberg TV for free of charge and get it over the internet. It's obviously a bit delayed, but still. Lutnick's his headline here on the Bloomberg terminal is the Supreme Court will side with Trump. Well, of course they will, because he's appointed them all. And he's, Lutnick's a big free market fan of India haven't decided what side they want to be on. He's saying here his shiny white teeth. Anyway, that's Mr. Lutnick, the business secretary, talking to Bloomberg at the moment on the data. Kind of how he's defended that weak jobs numbers. Again, they'll be blaming the Fed for not cutting earlier. 150 basis points. I noticed this morning is the anticipated cut between now and the end of 2026. So 150 basis points. The market is now pricing in. That might have gone up since this week data. Obviously, as I said, the big caveat is it's the August data. It can get revised, but as we saw with the July data, it wasn't revised anything like as much as we might have anticipated. So stocks are higher, the dollar's weaker. We'd expect gold to go on to a run as well. We got stopped out of our energies, metals. We got stopped out of our gold long position yesterday, and there we go, new all-time highs for another consecutive day. So we've just smacked to new all-time highs: 3,587. So 3,500. 3,600 is in the target zone for gold today. And look what again, this is classic, one of those trading ideas, but don't let it eat you up. If I just go this up to the daily time frame. So we'd been running this really, really nicely. We'd got in here for a couple of Fridays ago on the 22nd of August. Our initial target was just a few dollars above where we were. We got in back here at 3,370. Our initial target was only $8, so $3,088. Obviously, that's a lot of pips, a lot of points. The way the gold market works, but let's just talk in dollar terms at the moment. And since then, it's rallied and rallied. I mean, I never added to the position. I probably should have done, but should have, would have, could have. But this is what we did. We obviously, the way I trade, I pull the stop loss up, and I just got a bit too aggressive with the stop loss. I think on the 4-hour time frame, I had it. Normally, it's around about the 50 period moving average. I got it just shy of the 20 period because it was just adding and adding. And there we were, just for 1 hour yesterday. We went down, go back to the hourly chart. I got the stop loss up to this area here, this support area here. I just probably dragged it a wee bit too close. But even if I'd had it a bit lower, it still would have been taken out. So literally, we were stopped out for just for an hour or two in that massive run that we'd been long since the 22nd of August. So, don't get too carried away. Even when you're in big profit, guys, to like get too aggressive and just try and keep cool. Remember, it was on the daily time frame, so if I'd been a bit more reserved with my stop loss when it was there, this was the big day blowing through. So perhaps I would have probably got it a bit too close anyway. I just had it left because it was for ages just below the 3,500 level here on Tuesday when we had that meltdown in the treasuries market. But yeah, the volatility yesterday took us out because we got it too close, and I obviously didn't want to lose out on profits. But that, as I we say, I think where do we get out? We got out at gold was 3,328 was the 3,528 was the final stop loss 3,528, which is sort of there. Yeah, so that's where we've stopped out yesterday. But we continue to rally, and again, end of day traders happy to see a down day, and this continues. It was inevitable somewhat, but I know another strong day today based on another weak jobs number. So gold very very much in target. The futures market has been well over 3,600. This morning and this week. I'm just having a quick look at it now. I've got a futures chart here. Metals, gold's 3,636 yesterday, up 0.8 of 1%. Even though the market went down, but we are moving again on that. VIX, interestingly, down at 16. So stock market's absolutely run, and there's nothing to stop them really now, I would argue. Crypto, it'll be interesting to see how cryptos responded. 112. So the weakness of the dollar has helped our crypto positions. It's not, wasn't it? Refreshing. There we are. Recover that key 112. We were capped at this 20-day moving average this week as we've come up so far, and today we are now back over 112. And we're now, so it could be a really interesting day again today. Dollar doesn't look like it would recover much from this, so we'll see where that how that finishes as well. So wow, quite a significant non-farm payroll again. So if we just go back for the headlines, it's weak across the board, as I said earlier. So let's just go down these in order. So the monthly earnings come in line with expectations, 0.3 of 1%. That means the annualized number has slipped from 3.9% to 3.7%. What does that mean? Well, it means those that have got jobs, that have kept jobs, are stayed in jobs, their average earnings on a cash basis, those that get paid on an hourly basis, are coming in at 3.7%. Ahead of inflation, so there's cash in people's pockets. The work week is about in line with expectations. It's ticked down by 0.1 of 1 hour, so 34.2 is the average weekly hour work. This is quite a key negative number. The decline in government payrolls. Again, the administration would like to see that, but we were revised higher last month. These next two are obviously the key ones. The manufacturing payrolls have declined by 12,000. Remember, manufacturing, repatriation of jobs, repatriation of factories, re-establishment of factories. This is all part of the Trump mantra. He was going to deliver it through tariffs. It's obviously still early days there, but not a great number. Plus 22,000 is the headline. So negative decline for manufacturing. Last month's was revised higher, but not by very much. You can see here it's still declined by 2,000. Headline, 22,000 new jobs created in August from the expectations of 75,000. As I said yesterday, there was a lot of analysts round about the 50,000 mark, 40,000 to 120,000 was seen as like a window of normalization, so nothing would really change. This has really flipped things back to the other way. So, and we can see that probably in the Treasury moves. We don't, if I show you the, where's it gone? Where's my Fed Watch tool? There we are. So we look at the Fed Watch tool. It's probably had a time to recoup now, so I've only just gone into lots of people using it. So again, the online tool here, guys. Anybody It's not connecting there for some reason. Everybody's having a look at it on the CME group. We'll come back to that in a minute when it comes up. But anyway, I say Bitcoin needs to hold 112,000, needs to hold the 20-day moving average for a move higher. 114 is the next resistance, and then 115,000 where the 20 nicely supported rally from the 107,000 earlier this week. So we have moved up, and so are we still going to be capped by the 112,000? We'll see by the end of it, guys. 7 days a week at theproptrade.com. So gold we've had a look at, majors we've had a look at, energies we haven't looked at. The oil market was hit by the news yesterday of OPEC Plus saying they are going to cap their output. So we had is that going to work? That doesn't look like it's working for some reason. Energies, not much in energies. Not okay. That hasn't worked. Okay, never mind. Lost connection. Oh dear. Oh. Trying to reconnect. Can you hear me, mother? What happened there? Maybe my internet here. Maybe just the busyness of the news flow is probably what's happened. It might be in the struggling to get to the cryptos or an update. There we are. TradeLock was obviously updating. Where was I? I was looking for energies, wasn't I? And we were looking at WTI. This is the US, or what was US oil? We've got it called WTI and Brent. And so we're back at 63. So a big move lower for US oil again on yesterday's news of the, say, OPEC Plus. Sorry, it's the daily, isn't it? Move lower on Wednesday on the gossip that OPEC were going to do. So OPEC Plus were going to do something. They're not going to keep their cap in place, their production cap. So we had this move lower yesterday. So maybe some more supply coming on. Not going to cap things. So more supply means weaker prices. $63 for WTI and Brent, the global what's the word? Base for oil price at many quote at 66.50. So let's just go back to the indices and our S&P 500 position. Is that all right? Okay, so this is our new feed. So 65.23 to the upside. The Dow 45.630. We're at long. The S&P we're also long. The Nasdaq, where's the Nasdaq gone? Nasdaq, there we are. Is it a wider Nasdaq? 23,800. Here we are. 23,815 to the upside. So again, we're long this position. Okay, what's happened there? Let's update the account. Okay. So that's still open. If we look at the crosses, the major Forex crosses, before we wrap this session up. Sorry, the Forex. Oh, is it not? Oh, is it not? It's only giving me Forex and not. Oh, it's the props. No, that's favorites. Forex is the whole gamut, is it? Okay. I thought it was split into not further split. No, so let me have a look at the GP USD. .x. Okay, these are the users. So 130. It's come back a bit. So sterling's come back to the 135 level. Euro Look at the euro crosses, the euro pairs, euro dollar. Here at 117. 30 to the upside. So we're back over 117. I've lost all my settings as my layouts, if the layouts are still working. Invalid symbol. Okay, so that means how can I invalid? Does not exist. That's a shame. Let's have a look. Haikanashi. Whole moving average. No, Haikanashi gone. Okay. Seller V, we'll have to import that somehow. I'll fix that one. It's not existing anymore. Pivot points. Make a copy. No, I don't want to make a copy. Unload the layout. Matty. Refresh. All right. Okay, it's the updated one that we've done, as well as what. So my temp load layouts are not working. We have to recharge all of these, I think. Let's try that. Indicators, para. Oh, Parabox aren't still there. Okay. All right. I'll need to set all these up again on this new layout. So just bear with me a second for that. I'll do that over the weekend. So there we are, my friends. A strong. Let's go back to the euro. A strong. That one. A very strong move against the dollar in this post non-farm payroll data. We've got the 5 minute time frame. It's weakened, and it's held the weakness, if you're being, or the euro's held its bid against the dollar on the that very big miss for non-farm payrolls, 22,000 at the top of the shop. There's still plenty of data to come later today. We got the key CFTC results. Remember these CFTC readings. Remember, guys, are what's really going on in the futures market. This is where the speculators, the investors, what positions to have, both big investors, smaller investors, whether they're long, they're short, all these different assets. Obviously, the Forex ones are the ones that demand most attention. Gold's very much in focus at the moment. Massive move we've seen in the gold market. So plenty going on for the rest of the day. But non-farm payrolls, some people's most favorite trading part of the month. It's not for everyone, but for me, obviously the headline is key. Unemployment also has ticked up back over 8% for the wider U6 employment. That's caught my attention significantly. The unemployment rate also ticking up 4.3%, but in line with expectations. And permanent employees for 3.6% from 3.56 average wages for permanent employees. So overall, a weak number. It's another weak number, so it's suggesting the weakness in the jobs market is there. However, again, I would caveat that with yesterday's. I don't know. Let's go back yesterday's. Weekly claims still show that that they're not looking to sack people, although the challenging numbers also on Thursday was very, very weak at 13.3%. The job cuts were up. ADP was weak at 54,000. But is that closer to what's going on in the 22,000 we've seen in non-farm payroll? We shall see. But as I say, the continuing the weekly claims, although up 7,000 a week, which is quite a significant move, we're still not the 245,000 we saw on a weekly. But this one might be also playing catch up with the monthly non-farm payroll data. But we'll see if things are as weak as this the 22,000 that we've just seen today. So I'll leave you with that from our calendar. 22,000 for the headline non-farm payroll, decline in manufacturing, unemployment rising to 4.3% from 4.2%. in line with expectations. It says average hourly earnings 0.3%, also in line with expectations, and the annualized number therefore 3.7%. The detail participation rate 62.3, ticked up by 1 tick. So again, impact of perhaps the immigration policies. But the wider unemployment rate 8.1% over that hugely psychological 8% for the wider measure of unemployment in the United States. So have a safe weekend, everyone. Take care. Let's have a quick look at next week. Next week, we're back. Volumes are really back to full force next week. It's not a great deal going on, though, if we just do our following week. Obviously, we've got CPI next week. If I just do the filters as well, we'll just do the high impact ones for as we're doing the whole week ahead. Headline of PMIs next week as well. That was this week. Sorry, next week is what I wanted it for. Apply. There we are. PMIs with this week if you want it. Top of the shop tomorrow. This week coming is the inflation, the CPI and the PPI. CPI more market moving. That's Thursday. At the 11th, PPI is actually coming out the day before. It's normally the way around, but for some reason, probably because of the Labor Day holiday last Monday, we have CPI on Thursday, 0.3%. The core 0.3% also. So a headline round about 2.7, 2.8%. If that gets to 3%, that will have some squeeze, and then see also that's on next Thursday what the initial job claims are like. So I'll see you all next week. Have a safe weekend, everyone. I'm going to wrap up my trading and see what those. I can't remember where we were last night. I think we were long the dollar on a couple, weren't we? If I just bring this up here, let's go back to the trading strategies from last night. Yeah, so we were short Kiwi dollar, so we were long the dollar against the Kiwi, we were long the dollar against the CAD. They've both probably been stopped out. We took a long on the FTSE and now long on the SPX, and we were still long from the Nasdaq from earlier in the day. So these are very much in the money. I say gold got stopped down. I'll update all of these, and we'll see how we finish the week tonight, and if there's any more potential new trades for tonight. Let's just see if we can get that back, the CME, before I go and share it with you as well. Yeah, that's working now. It's obviously a glitch in market, guys. 12 days and 12 days and 5 hours to the 17th, when we looked like an absolute nailed on guaranteed. Where are we? 17th. 97. Oh, that's not actually moved that much, actually, but 97% chance, and there's still now, from what this wasn't on at all yesterday, it's now a 2% chance, 2.2% chance of a full 50 basis points cut. That is directly related to what we've just seen from the non-farm payrolls. I'm absolutely sure of that. So there's no chance, is what the market is saying now, no chance of rates not being cut. Mirren joining the board is obviously added to that, but 97.8% chance of at least a 25% pace. So that's nailed on. October, which is obviously another 6 weeks away. It's the end of October. So October 29th is the next meeting. And now from a 50-50, as we were yesterday, that's leapt up to 73 or 73.7%. So this was 50-50 yesterday. If you see the, there we are, 48, sorry, 50... 53 45 basically yesterday. Today 74.24. Huge impact of that non-farm payroll, and look at that, a 1.6% chance of a 75 basis points cut from where we are now to the end of October. So 1.6% chance of a 75 basis point cut according to this, and a chance of a 50 basis point cut in September is 2%. See how that changes over the next few weeks. So there we go. It was outside of the comfort zone. That 50,000 to 125,000 we were talking about earlier came in at 22,000. So last, some interesting non-farm payroll data, but see what the revisions look like. And again, the caveat remains, as I said, my friends, It is the August number, is notoriously volatile, but it has come in much, much weaker than expected. Euro 117.35 as we close out. It's held onto the gains from the data. Let's just go through the other majors. The metals, gold, 357.88. So new all-time highs here. 3,586. We're at 3,580 still for gold. So dollar weaker. Crypto, the key Bitcoin now over 113,000. So it's held on to the gains as well. The weaker dollar's lifting the crypto market as well. So and finally, the S&P 500. Got used to these now. SPX, just SPX now. 5,627. So again, another one that's continued to move higher, and we're in the money on that one as well. So take care, my friends. Hopefully you've got the email. Lots of changes for us today. This is part of it. The upgrade to the feeds, the tighter spreads, margin changes, clarity over a few things that people were asking lots and lots of questions about. So check the website, check your email. And as ever, my friends, may the pips be with you. Have a great weekend. Stay safe, and see you all again on Monday. All the best, everyone. Bye-bye.